Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 10th of August, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. Welcome. Who do we got on today? Say hello in the chat if you're there. Morning, Tony. I've got Tony. I know I've got Tony. But morning to the rest of you guys if you're here. Morning, Clinton. I'm going to go through our usual regular run through in here today. Apologies for no webinar yesterday. Didn't really miss much with the markets though, did we? NASDAQ a little bit wobbly, but we're going to go through what we've got coming up today, what's important, what we've had. Or we'll take a look at some articles from the major news wires, take a look at the macro fundamentals, geopolitical events that are impacting markets right here, right now. Morning, Kaz. And then we'll also take a look at we'll look at the charts. Anything you want to talk about, stick it in the chat and I can run through. So we'll go through in here. Yeah, we'll take a look at the charts and see where the trigger points are. Again, similar to where are we? Similar to Friday's webinar with the employment report. Right. I don't see massive advantage of going through lots of levels and scenarios because CPI, we've got it on the screen here. CPI is going to be critical going into today. All eyes on CPI. Obviously, core number in here expected at 0.5. Previous was at 0.7. So we're looking for this to start to all dip. That's the month on month. The year on year core looking at 6.1 versus 5.9. The headline number looking at come in at 0.2 from 1.3 on the month on month previous, and looking for the peak to go in to be 8.7 versus 9.1. Now, if we don't get the peak going, then I think the markets are going to be reacting quite aggressively to that. We are looking for this to start to roll lower. That is the full expectations. Okay. So so I think it's going to be a matter of reacting to that data, right, guys? We have no crystal balls. We don't know what it's going to be. Strong advice is always to don't carry a position into the data. That's guessing, that's gambling. Go down the casino if you want to do that, right? What I would say, but I'm very much for, trade on the news, right? And with these big data numbers, although as kind of professional retails, whatever you want to call it, pro-tail, they call it, semi-amateur traders that you guys are, we don't have the systems necessarily to be trading with the professionals. And even the professionals with the systems they have, are always going to be behind the algorithm. The algorithm's always going to win, right? But nevertheless, it doesn't mean you can't still benefit. These moves that we get on these bigger data events are enough that you can miss the first bit of the move. So, I still am a champion of trading on these, but then, as the data comes out, right? So, but not, guessing and speculating what the data might be. The expectation is for the peak to go in and for it to be lower. So we're going to have to wait and see, right? So, and the other thing with this you have to remember is, even though the algos get a jump on us, right? The algos in here are reading core that, they'll be reading certain headlines, right? And they will be taking the data that they've been programmed to take, right? And whether they are, some of the algos are sophisticated enough to look at, to actually compare, because what we might get is you might get core number beat and then the actual headline number misses, or the month on month could do something different to what the year on year does. So you got, even in this bit here, we've got 4 pieces of data, right? With the actual inflation report is even bigger than that. It goes deeper than that. So, but we've even got 4 pieces amongst the main pieces of data, right? So the algos read them, they might get it wrong. So sometimes you get that whipsaw. You get the market, if you get conflicting pieces of data when you get multiple data release. Sometimes happens on payroll because the NFP number, the non-farm payroll number, versus the employment number to the average earnings number, they could all be showing conflicting numbers, right? Or you might get revisions, right? The revisions are important as well. Anyway, the data is important. My main point here is don't carry a position into the data is my strong advice. It's something that I don't do, but carrying something straight after and taking a reaction after, or even setting up to enter as the market breaks above or below certain levels, I think that's okay, right? So anyway, big data, that's all the focus we have in today. Now, incidentally, we did have some other data this morning. German CPI came in, and obviously global CPI is very much a big focus as well. German CPI came in bang in line with expectations, and expected at 0.9, came in at 0.9 in the month-on-month data. If you're an oil trader, we do also have crude oil inventories out later today. So obviously the CPI data comes in just under 1 hour now. We get this crude oil inventories 10:30 Eastern, 9:30 Central times. Okay, I don't think any of this is going to bother us too much. What we have left, right? What else do I have? Let's go through 5 things to start your day. I've picked out a few articles from the major news wires. So we'll start off in here. Obviously, inflation. We've already kind of covered that in here. There's the expectations. What else do we have in here? Tesla. So Elon Musk's been selling a big chunk of Tesla stock, 6.9 billions worth of Tesla stock, and he took to Twitter to announce why. He didn't want to do a fire sale in case he doesn't get to pull out of his deal with Twitter. So he's trying to pull out or wanting to pull out of the acquisition of Twitter, but he may be forced to go ahead with that acquisition of Twitter. And if he is forced to go ahead with that acquisition, he didn't want to do a fire sale of Tesla stock to pay for that. So he sold off. He sold off some stock yesterday. Okay, Tesla stock actually rose 2% before the start of regular trading Wednesday. Twitter jumped 4.4%. Okay, so there you go. So you would have thought these would have been negatives, but actually tend up being positives in here. The rest of this stuff in here is not really big for us. The Rhine, okay, so the main river that runs through Germany, Holland, Switzerland, is going to be potentially impassable. It's just too low because of the hot weather we're having globally, I think, and certainly in Europe here we're having like massive heat waves. Global weather or global warming? I don't know. I'll let you decide. That's a whole topic. I'm not going to open that can of worms, but probably global warming. But nevertheless, so that's a problem for Europe. There's also been a headline. It's not on here, but a headline from the UK today, incidentally, that potentially UK is preparing for a potential this winter of forced blackouts for industry and maybe for homes. Because of issues with energy. And they're already preparing for that in the UK. So, and this is something that's going to impact potentially the whole of Europe as well, given the issues with energy coming from Russia as we go into the winter. Stock futures are up overnight. No real reason for the small rebound we're seeing in here overnight. We did get a slight dip lower, but markets have been pretty much sideways in here. And so, so there we go. That's what we've got coming up from 5 things to start your day. I'm really recapping this. US futures heading higher. Tesla actually up in pre-market, even though Musk sold stock. Okay, oil lower. Oil lower as Russia set to resume crude oil flow. So they've reopened a pipeline. So that's positive. Positive for supply, so negative for the price of oil. Oil drops as Russia prepares the Druzhba return. Okay. To resuming oil flow to Central Europe, and then we get those API oil stock data in here as well. Musk, selling his 6.9 billion of Tesla to avoid a fire sale. What else do I have for you? US consumer price grab expected to slow due to lower gasoline costs. So in here, so this is the data obviously, and this is what the expectations are for the dropping cost of gasoline coming through. More on Musk. Oil drops again. Same article as we got on Bloomberg. What else do we have? And then just where we are going in to today. So Europe, you can see European bourses are pretty much unchanged in here this morning, marking time ahead of critical data. Completely expected for the market to go sideways. With the S&P and Dow were hardly moved yesterday. Nasdaq actually took a bit of a hit, was down about 1%. Nasdaq's bounced about 0.3 this morning, about 0.2 to a quarter of 1% for the Dow and the S&P, just rebounding from yesterday's small dip. Still not much change in here on what we're expecting from the Fed. Just having a quick nod to the Fed tool. Still now a big receding risk after last week's employment report of a bigger cut. So, a smaller cut. So we're the market now still pricing in here a 75 basis point cut, which it jumped to. This was round the other way, remember, ahead of the employment report, even after the Fed pushed back last week. on the more dovish narrative. The Fed sort of pushing back on that dovish narrative early last week, but it was really the employment report that saw this switch from being almost nailed or 70%, 70 to 80% chance of a 50 basis point hike. Now we've got nearly a 70% chance of a 75, given the very strong employment data, thereby allowing the Fed to be more aggressive with further rate hikes. Right, let's go to the charts. I don't want to spend too much time on here because I think it's kind of going to be redundant in about 45 minutes time. A lot of these levels are going to just be broken through. But if you want to take out some breakout, you can see we've just been sideways really since the employment report. Actually, employment report saw a significant dip and a rebound, so that's positive. Monday we went higher, and since then dipped yesterday, bounced today, going into today. This is the E-mini, by the way, the S&P E-mini. Okay, so here we are in here. So the market's been in consolidation, 15-minute chart. Let me just zoom out a little bit. I've got to go 30-minute chart. Get rid of this in here. So you can see kind of pretty much sideways in here. There's the employment report, sell off, and then we rebounded, went to a new high on Monday in here, but kind of sideways. It's just breakout parameters now. I would argue that the market has twice now held in here. So there's the employment report low, okay, and it's twice held there. Well, you can argue it went down to walls, but nowhere near really. Back on when was that? That was Monday, and then yesterday down towards, held above, bounced overnight, held above. Almost at the same level, I think, in here. Low here, 41.13, 41.1375. So rejecting a more negative tone. And if we want to draw the kind of whether you have the trend line coming down through here, yeah, it's broken, or whether you have the trend line, bit of a freehand draw there. Usually I do the extension, but it's quite clearly these are broken, or whether you draw the trend line. Oops. No, coming down like the more accelerated one down through here, right? You draw whichever way you're going to draw these, right? If it's the internal trend line or the bigger trend line, we've broken. And then you also got on the smaller term, you've got a double bottom, yeah? These two lows around 41, 14, 13. Okay, up through there overnight in the last hour or two, little double bottoming. So the market's signaling a more positive tone, but obviously CPI is going to change all of that. I would have broader breakouts. I think not through the overnight lows. I think that's the employment report low there. That's at 41.0375, and then probably you could go for I don't think you wait to the very high. I think you can go these peaks in here from earlier in the week, so up through there as the breakout. That's going to be 41.55. So 41.55 versus 41.0375. 41.03 maybe you put the entry points. So stop entries through those two would be the way I would approach that. And similar story in the Nasdaq. A little bit more negative. The last couple of sessions on the Nasdaq, notably lower, but then rebounding. We did take out the employment low, okay, on the Nasdaq yesterday. So took out the employment low. It was more negative for tech yesterday, but we have had the bounce overnight, and again stepping in to this is 15-minute, but I'm going to step it out to a 30-minute, and then remove all the what we've got in here. So here's the 30-minute. So there's the employment low there, okay, spike down there, the employment low. We actually went lower afterwards, then we went to the high, held on Monday, but then yesterday gave up. But then again, you got this kind of little double bottom going in. So the more important, you could argue the low here. I think it's just the overnight low. Otherwise, you're waiting for a much deeper trigger on the Nasdaq. So either you're looking at overnight low in here as your trigger, which is at where are we? Sorry, in here. Whoa, where's the data box? So overnight low is where are we? 12,963 and a quarter. Yeah. Probably not above the this overnight peak in here that we've set just recently. But again, you've got this bottoming pattern gone in. I think it's probably too late to wait all the way up here. You got these peaks up here. I don't think I'm going to be waiting for a push up through there. That's too high. Where are we? Low. 30, sorry, high. High 13,233.75. I think that's too high to wait for there. I think you got this little one in here. Look, so you got yesterday you had this impulsive move, it held, and then you got a second impulse. Got kind of two impulsive moves down yesterday, kind of held around the middle of the day. I think above that little peak there. This was the overnight move, and then this was the after the cash market open. That's the move lower on the cash market open. So we've already got back. There's the cash market open yesterday on the Nasdaq. So we're basically back to where we opened. But we'd already lost this overnight. So I think there's that little swing high there. I think that's important. Either the impulse high there from the cash market open, or just above there, you've got this little swing high pre-cash market open. So those two levels are going to give you those. 13, 1112 and a quarter. And that little swing there is 13,113. Those would be my buy side levels. If we're not above those, pre the CPI number, looking for a break of one of those on the top side. And downside, I think it's the overnight low. Joe, we did hold nicely here, right? So it went back and did the retest and then didn't retest overnight. So looking good. And then you got like it's like a little double bottom gone in here. Could argue actually a triple bottom if you look here. 1, 2, 3. Actually goes down here and again and then here. So you've got a triple bottom really down here, up through there, been qualified. It's dipped and it's rebounded again. So looking positive. So it's setting up positive, right? But this all gets blasted out of the water on the number. But the kind of the data, the price action is telling you there's demand. Now, given we could get a dip on this number, the thing I think you'll be careful of is if the number causes, for me, there's an underlying bid. It's underlying strong, both on this price action, the very local price action of the last overnight activity, and then if we go on either chart, then as you got obviously the whole uptrend, right? So both of these are from the short to intermediate term outlook, and also on the very short term, the intraday outlook, they're both setting up as positive. Yeah. So what I think you just have to be a little careful of today would be my word of warning is we could spike down here. If the number's slightly inflationary, and if it's very inflationary, it's down and gone, right? It's going to carry on, right? If it's only marginally inflationary, we could see a spike down into this area here, and then you'd be looking for supports from over here, from back in the early part of, is this early August? Yeah, early August. These supports down here, right? And then it could easily rebound from there. So be careful. I think it's easier to be long on this one. If you're short, be careful, because what we might see is a sell-off initially on the data, and then the buyers might say, you know what, if the data is not too bad, buyers could come in on the cash market open. So I think that's another scenario. So there's kind of three scenarios. It either goes up and carries on, I think, or it goes down and carries on, or it could down and dip. Yeah, I don't see it going up and going down. I don't see that. That's a possible. Obviously, it's a possible scenario, but for me, I think that's one's unlikely. I think we are either up and gone, or we're down and bounce, or down and gone. That makes sense? All right, I'm going to do a very quick nod to the commodity markets, and then I'm going to wrap it up. So let's have a look in here first of all. Actually, just a quick look in here. This is part of the reason. This is the 10-year. You see the 10-year in here dipped lower yesterday and lower, a little bit lower overnight. It's not a big move, but this push lower in price, remember, is higher in yield. This is the part of the reason that the tech got hit yesterday. The move to lower in price, higher in yield on the treasuries. Right, let's take a look. Let's start with gold on the daily. So gold maintained this upward momentum. Another new recovery high yesterday. Little bit of a dip this morning. I think that's buy opportunity. Stepping in 30-minute chart in here. There's the new high yesterday. It's dipped. It's rebounded. It's dipping again. I think this is buy opportunity on gold. And remember, gold up is actually acting with risk on. Kind of counterintuitively, because gold up is when we're seeing dollar down, and dollar down is coming with risk on. Yeah, the dollar has been the safe haven throughout 2022. So if we go into risk on environment, that is risk on, stocks up, less inflationary pressures, stocks up, risk on means dollar down, gold up. So this is performing. If you kind of go, if I step back to the daily, this recovery has been in line with the S&P. So there's a positive correlation between gold and the S&P, which is kind of counterintuitive, right? In some respects, with the natural nature of gold as a safe haven, but it's acting as it's reacting to the inverse correlation with the dollar. So yeah, I mean, this is going to move the same way as potentially as S&P, and this latest dip is potentially a buy opportunity for me. So still upside pressures there. Let's go take a look at oil. First of all, on the daily, still looks very vulnerable. It tried to rally yesterday. So you had this kind of 2 days of up, tentative up on Friday and then Monday. And then yesterday you had a rally failure. It broke above that impulse point there and fell back. I'll zoom in and show you in a second. But this is then an indecisive kind of candlestick, but it's a long-legged doji, usually means turning point. And the little of this little uptrend, so long-legged doji turning point, it's actually already broken below yesterday's low. Oil's looking very negative. Obviously, we had that news as well. If we go into the, this is now the 1 hour chart, you see that was an important peak there. So the market kind of tried to put in a base through that peak. If we go to the sell-off from this more recent high in here as well, we've got the trend line off the top. So the market reversed the trend line and broke above that peak there. That was an important peak on oil. Okay, if I put the horizontal line on for the peak there, I had this one in my report as an important level. Where's the data box? So in here, the peak there was, where was it? I had it on my report, 91.90. And then we flashed yesterday to 92.65, I think it was it? Yeah, 92.65, and then fell. So it got above here, signaled potentially in here a 1, 2, 3, 4, 5, a 5-point, so whatever you want to call it, I don't know, a quintessential point bottom in here, right? 1, 2, 3, 4, 5 lows, took out the high. Actually, that's a high, is not actually between the lows, but took out this high, right? Tentatively, and then broke above that high as well. That looks like a base, right? It reverses the trend line, and then to fail, having had these positive technical signals, to then fail is a real negative. And then, as I say, going back on the daily, you got this long-legged doji pattern in here, which is a turning point of the up move, and then we're broken below yesterday's low there, going back into the 1 hour. In here, there's yesterday's low, down through there. This looks really negative. I wouldn't be surprised to see a significant sell-off in oil today. Okay, so yeah, back down not only through the recent lows, but a deeper sell-off as well. And then you're looking at targets all the way over here, maybe down towards, I don't know, in here, 80, 85, 84 kind of targets in here. What's the swing low there? Sorry, where's data box? The low there is... Oh, there we go. Down here, I wouldn't be surprised to see oil as low as 85.37, low 85s today. Given we're trading, all the way up, where are we right now? So 89.10, that's a decent move, right? $4 move potentially to the downside. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Helmets and goggles on at the ready for the CPI data. If you're trading oil, you've got the oil data after that. Yeah, and I'll be back with you with another bull versus bear webinar on Thursday, and we'll pick the bones out of the CPI data. Take care, guys. Have a good one.